Well, with institutional groups, because we are measuring assets under known standards, it's easy to present information. You go to a grocery store, you go to the produce section, you know the price of everything, and you can touch it to make sure that it's fresh and whatever. It's very easy to do, and that's sort of the institutional mentality or mindset is that as long as we have this understanding, it's very easy to dance and get to a transaction. With the unsophisticated investors or the investors, again, it's one or two assets that a family ended up with. There's a lot of time spent on building trust because they just don't transact on a regular basis and don't really understand. They don't understand what they don't know. And so now we have to build trust, and they have to basically vet us out to make sure that we're telling the truth. And so oftentimes they engage their attorneys or their CPAs or family members or other parties that may have a better understanding to engage us and make sure that what's coming out of us or what we're presenting is in fact based on facts. And so what we've done with what we've taken from the institutional group side and applied to the unsophisticated investor side is really, I guess we've become instructors, so to speak. We're creating 10-year cash flow models, providing a lot of market data and analytics to help them understand how these groups view assets and where they make critical decisions within a 10-year investment cycle, and really to get them to understand as much as they know. Sometimes they don't want to understand. So they may have a property that the tenant is a short-term lease, and it could be somebody like a 99 cents only, which operates on a very thin margin, knowing that any increases in fuel or tariffs will literally take this business out of business. So they lost their cash flow. That or that there's a major capital expenditure such as a replacement of a roof, which could be 150 to 300,000, and the families hasn't been setting up reserves for that. And so now they're going to have a major expenditure, and they don't care. They just want to get top dollar. The property may need 300 to $500,000 of improvements. All they're thinking of is I want my top dollar, and I really don't care about what needs to be done with it. And in reality, if they don't sell it, they're going to be stuck with that burden. And so just really educating them that on what they own, what the challenges going forward are with the assets, what the opportunities are. So I'm a big fan of allowing clients to retain what I consider great legacy assets, but I'm also a big advocate of creating more simplicity and passive income. And so really helping them identify what a legacy asset looks like and make sure that we take those other properties that are non-legacy assets, let's start turning those over and get into a much simplified, more simplified portfolio that is going to require less capital, give you longer term income, and really peace of mind as you hold it or you pass it down through your estate is to just make sure you have a great quality portfolio. And so institutional groups, they know what quality portfolios are. They just want to buy an asset, cash flow it, and then as before it gets too complex and too expensive, trade it, sell it off. And so we're taking a lot of that institutional mindset and educating the non-sophisticated investors on those types of strategies.